In a major overhaul, the government has taken a progressive step to cut corporate tax rates to 25%. The tax revision reform is seen as a huge boost for investments, and this, in turn, is anticipated to have a domino effect on demand across sectors. Let's do a three-point analysis to understand how will this impact consumption-oriented sectors like cement, consumer discretionary, and retail. 1. Building materials and cement sectors stand to gain from tax cuts. For paint companies, demand continues to be robust despite the slowdown in consumption. However, other sectors such as tiles, sanitaryware, adhesives and also roofing have been feeling the heat owing to their strong linkages with infrastructure and real estate activity. Last year, paint and adhesive players had undertaken price hikes to pass on the crude-related inflationary cost pressures. Now, this year has seen 1 to 2% price reductions from paint and adhesive manufacturers due to the easing of commodity prices. The announcement of tax cut provides an additional tailwind to spur the demand and also push up volumes. The biggest beneficiaries will be paint, tiles and sanitary ware manufacturers such as Berger Paints, Kansai Nerolac, Kajaria Ceramics, which have paid an average of 34 to 35% tax during the last 3 fiscal years. Adhesive and construction chemical majors like Pidilite and Astral Polytechnic will also gain. Savings from lower taxes are fairly substantial and will ultimately get passed on to the consumers. Now, we also anticipate that most corporates will realign their product pricing to perk up the demand based on price elasticity. During Q1, cement sectors had witnessed a contraction in volumes due to weak economic activity and weak monsoon season, and this has adversely impacted the cement prices across regions. The tax cuts also give a much necessary breather, while the recovery of demand hinges on government spending on infrastructure and also housing. Tax savings do provide a much needed cushion to their bottom line. Now, Heidelberg and also Ultratech appear to be one of the top gainers from the recent tax adjustments. 2. What will be the impact on consumer discretionary space? Well, majority of companies in the consumer discretionary space trade at steep valuation multiples. Prima facie, since short and medium term modes of these businesses seem to be discounted in the stock prices already, investors may consider looking at companies such as Whirlpool, Voltas, Page Industries, Titan or even Relaxo only from a long-haul perspective. 3. How will retail companies get impacted? Well, given India's large consumption base, Indian retail remains a promising space. Stocks in this sector tend to command steep valuations and have been subjected to high tax rates. Therefore, most retailers' steep reduction also in corporate taxes will bode well in terms of earnings growth. However, further appreciation of market capitalization of these companies will be contingent on a confluence of factors which include improvement in demand sentiment in the Tier 2 and Tier 3 regions. Store additions also will uptake in the private labels and also the supply chain and inventory management. Now, tax benefit for companies like Avenue Supermart, Shoppers Stop or Trent is in the range of 9 to 12%.